Welcome back to Kryptolytix, giving a fresh take on crypto analytics, and this is your crypto recap where I cover some of the things going on in the crypto space. So let's jump in. Okay, so let's start here on the cycle chart for Bitcoin. I tried to do one of these last week, but I had weird issues because of a tool that I was using to be able to draw on the screen for my videos, and I recorded a massive video and it all just did weird stuff with the audio. So I'll just try this again. At least we've got some new information to work with and things have changed a fair bit since I last covered Bitcoin, and I'll cover Solana in this video as well. We'll do both in the same video, I think, because, well, I think I'll probably try to keep this one short and sweet. So what we have right now is Bitcoin hitting that 56.6K level. Now, a couple of weeks ago, I said that if Bitcoin keeps moving down, I think we were around here, around 65K. If Bitcoin keeps moving down, then this around here, or even 55, around 55K, would be one of the places I would look for a potential bottom at least. Now, we're pretty much right on the last low. So the low in April is about 56.5K. Now, I'm going to look at another chart in just a minute, but we've got the stochastic RSI. So not the actual stochastic, but the stochastic RSI at the bottom there. And we did actually bounce quite nicely off this log regression channel trend line. Right? It was a nice bounce there last week, but we failed to hold that and then continued on to lose the bull market support band, which is right here. And now we are now testing the bottom of the average true range line on the weekly there. So last time we tested it was all the way back, and we actually broke it, in fact, in July last year, which was our bear trap, but our sort of fake breakdown last year. So that's what we were looking at the time, where we, consolidated that 210-day period, roughly, or 220-day period. For comparison, we are at 126 days, and that would bring us to the end of September if we were just to do the exact same thing. So will we keep going down from here and start to test our 52K level? And again, I think I've mentioned before, but as long as we're above that 52K level, as far as I'm concerned, we're still in the bull market. Getting down here though would be really bad for sentiment. And as far as sentiment goes, if we have a look at the Fear and Greed Index, as I posted on my X this morning, the last time we were at a 29, which is what we're at right now, was in January 2023. So we're actually all the way down to like 26, and we might even get that tomorrow, depending on how things go. But it was on the 29th, and Bitcoin was worth $16,859. Okay, right now, BTC is worth about 57K at the time of recording. So that's a pretty big difference for the Fear and Greed to be the same level. We haven't closed a week yet below this support, and this support level was a inefficiency put back here just after the Pi cycle top of the last cycle. So right there, you can see this. If I move this out of the way, you can see this red gap here, this red box. That's a high volume inefficiency candle, which acted as support. And then when we broke down below it, it started the bear market. But this time around, it's acted as support as well. We had a few touches along there. But for the most part, we're hitting that level there, which also is our trend line. So this is our linear trend line, which it's hit. So let's just turn our indicators back on so things get a little bit more messy. But again, so I mentioned that ATR, and this is on the 3-day, and this is slightly different settings, and this has held the entire bull market with no fake out with this Heikin-Ashi super trend. So if I hide everything else, we can see we are at that level that I was talking about in my short videos where I cover Bitcoin and price updates and stuff like that over on X. I did have this as the potential low. And since we haven't seen Fear and Greed this low in quite some time, and there's just so many headwinds, you've got Germany selling Bitcoin, you've got minor capitulation, and I'll show some more bits about that in a second. We've got some really, really, really bad news. And what's happened the last time we've had this massive snowball of bad news? Well, it's marked the local bottom, and it's marked the bottom or the low just before a massive run up. Now, I have to admit that it does seem kind of crazy to be talking about bullish stuff right now, but that is what it is, right? During the bull market so far, when we had the banking collapse, we had all of these different super bearish sentiment news, and it really shifted bullish sentiment and hit the market really hard. and really rocked sentiment. We had that formed the bottom in the past, and we shot up from there. Now, will we shoot up from there? Well, as long as Germany's selling insane amounts of Bitcoin and we've got that 90-day minor capitulation period, well, that would be quite difficult, but it's possible, especially as liquidity builds above from excessive shorting that is taking place right now. We're also at the edge of the volume area. So that's this area here. If you look on the side, we're at the very edge of this volume area. So you can see essentially as soon as we get under this sort of 55K level as far as volume's concerned, the next support is at 52K, as you can see right there, about 52.5, which is this cluster of price action here. And then another one at 43K, right? You can see right there, which that's actually our biggest area. If you actually zoom out, you'll see that big spike up. That's our point of control, right? That big red line there, that's our point of control, which is the highest point of volume, which means there'd be a lot of support there, at least for volume. These two levels were hopefully a support that we had in terms of the volume profile on the side there. You know, you can see there's a nice peak there and a peak there as well, but we did not hold those as support. So now they would be resistance for us. And technically speaking, you can see that that would have been a rejection there. As we came down here for that first dip and we made a recovery, anyone that was underwater that opened up positions over this sort of period here, essentially they would have now been like, well, that's it. We've gone down below now. So it's time to exit right here, which is because we had a lot of volume here. Essentially, these people that opened there didn't want to risk losing their money or being liquidated. If we had a look at the Binance Perps chart, so this is all leverage trading, you can see that it was definitely right there. That's our point of control. Point of control being the largest point of volume on the volume profile there. So a lot of Perps positions trading at this level, a lot of longs, I would say, trying to catch the next leg up to that 80, 90K as were the predictions. And essentially they were just like, nah, we're closing our positions now. And that caused that massive, massive move to the downside. This is a 3-day candle. So we're at that support right now. And you can see a large spike right there at 52K as well for Perps at this little cluster here. So that's our next volume support if we lose the Kynomatix super trend. Now the Kynomatix super trend at the moment, you can see it didn't fake out there, right? So, you know, we had other indicators faking out there, but the Kynomatix super trend held very nicely as support there. So where we just sit here on the bottom, like we did back in September 2023, and hold it as support for a period of time, that was months. That was months, because in November, that's when we got our break to the upside, essentially, and broke out of this horrible range. If we can hold here and range sideways, I think that would be quite good, at least. Maybe we get a little deviation below, pull back into the range. Hopefully that's what happens. We don't know what's going to happen, but sentiment is quite bearish. And if we've got Germany continuously selling, then that's not going to look good for us, at least in the short term. But maybe they will actually listen to some other people in their cabinet. So let's have a quick look at the news and we'll come back to the charts. So as I mentioned, we've got Germany essentially. We've got here the Times of Blockchain a couple of days ago posting this. Another dose of Bitcoin, 832 Bitcoin was moved just 1 hour ago. So that was a few days ago, preceding this massive sell-off. Of this, 282.74 worth 17 million was sent to Coinbase, Bitstamp, and Kraken. So you can see all of these wallet movements, and that's all well and good, but we've got here, in case you missed it, German Member of Parliament, Joanna Kotar, urges the German government to stop selling Bitcoin and hold it as a strategic reserve currency instead. So I was saying, just please listen to her, because otherwise by 2030, you'll realize what a huge mistake you've made, essentially, because Germany's economy is in trouble. So that's one of the reasons why they are doing that. You know, ever since all the stuff happened with Ukraine and Russia, they can't get cheap gas anymore. And as a result, their economy is in trouble because they are a manufacturing economy or a producer economy. And without cheap resources, especially gas, because it was mainly gas that they were using, or that was fueling their industry, they are no longer competitive price-wise. So prices all over Germany are going up, and their economy is, well, I guess it's in trouble enough for them to sell Bitcoin. And this is them selling off their Bitcoin and essentially putting a massive amount of sell pressure on Bitcoin's price. We also had Justin Sun saying that he's willing to negotiate with the German government to purchase all of its Bitcoin off market in order to minimize the impact on the market, because it is being sold directly on exchanges and not OTC. So that means that we're getting proper selling pressure, essentially. And the market's also freaking out because the Mt. Gox coins are on the move. We had here Mt. Gox moving 42,228 Bitcoin. That's $2.71 billion from cold storage to a new wallet. So what does this wallet mean? This is probably the distribution wallet, I would say. You can see it right here. And I think that the market, or at least most participants in the market, are expecting this to be potential selling pressure, which is another reason why people are freaking out, absolutely freaking out, right? And as I mentioned, with regards to the miners, we've got huge miner capitulation. So this is the network true hash rate is down all the way to here. So market bottom after FTX, that was right there, was minus 7.6, and we're pretty much at the same levels now. And we can see here on the hash ribbons indicator, we're no closer to flipping the moving averages. So they're pretty far apart, in fact, and we really need to flip those and hold those so that the purple is below the blue. Right now, the purple is above the blue. You can see it was coming back a little bit on June on the 18th, but they just continued to sell off, essentially, because as I've mentioned in prior videos, with the halving, the rewards are halved and miners need to sell Bitcoin in order to buy more mining rigs or upgrade their infrastructure in order to remain competitive. So that's essentially what we're seeing. This is huge miner capitulation. That's a really, really big spread between the two. And if we have a look at just after FTX collapse, what did it look like there? We had a big bend apart, and then that's when we went back up in price. If we have a look at when that was right there. It was admittedly after a decent run up, but it did start to squeeze together. So I think we need a consolidation or bottoming period like I showed before. Some sort of sideways price action, I think, without big dumps down or anything to that effect, and hopefully then those moving averages cross back above like what they did back then. And the reason why I'm talking about January now is because we're in the same fear and greed index level as we were back in January. Of course, we had that other period of sideways consolidation, but the miners barely even did anything back then. So there was a crossover back in August, sort of September last year, but that sideways period, blue is above the purple. So that's why we're looking at those moving averages. They're really spread apart. So as long as they're spread apart, it doesn't look so good in terms of the potential for a recovery, essentially. But the hope is we get a bottoming structure back just after the FTX collapse, which was the bottom of the bear market, or even like this, which again was that last sort of bear trap that we had before we had that next run up. So we'll have to see what happens in terms of the hash ribbons, but we're definitely getting minor capitulation, and that is on top of the German government selling. Now, also, we should have a quick look at the liquidity chart, right? So this is the liquidation heat map. This is actually crazy how big the liquidity is above now. We've got a huge cluster right there. There's tens and tens and tens of billions of dollars of liquidity all the way at the top of price now, all the way at the top of this range that we formed since the top in March. So we did have a pretty big spike there. If we have a look here, we can see about 5.3 is actually a cluster really that goes all the way down and starts to drop off around 55k. So not a lot of liquidity down there, right? There's all the way down the bottom and all the way down at 50k, but at least within the immediate close to price liquidity, we still have down to, I would say, about 55k as a liquidity pocket. We just took out this $5.32 billion liquidity zone. So that was tagged. So 56, 186, let's have a look and see if we've actually even hit that yet. So on Binance, at least, we haven't even gotten down there yet. So quite close. And maybe we're looking at potentially people have been closing their positions, adding to the fuel of as it started to approach there because they didn't want to get liquidated, which makes sense. So that would have added to the selling pressure as well. Now, if we have a look over here at this chart, which I covered in my X update last week, got no engagement from it at all. I don't think people wanted to hear it, which is fair enough. We only like to hear bullish posting, but we've got to really talk real talk at the end of the day. And at the end of the day, I'm still overall bullish, but price action is really bad. And we still, once we fill that liquidity zone, so there's that 50, 56, 1 area to the high 55k region. And there's our long-term trend lines. This was established in the last bull market. So we got touch. That's basically 2023 to the start of 2024. When it broke down below that, that was the confirmation of the bear market. So that's what this is. And you can see it, we reacted off there right here and created a cluster of price action there, also known as an order block. So you can see right there, that's your order block there. Now, if we have a look over here, we can see that if we were to test that level once again, essentially that is sitting at around $55,000, or directly below, at least, we can see it's about just under 55. That's a lot, but we got this liquidity zone here. So my hope, and you know, hope's not a strategy, but my hope is that maybe we do bounce around in here, come and retest this level, which completes our 5 waves. Now, that was one other thing I mentioned as well in this, is that this looked like a 5-wave corrective pattern, and essentially it's all playing out. I was hoping we would get further up. So here we go, we've got 4 right here, and that was at around 65K to try and take out this liquidity zone right there, the number 4, at around 65K. But we didn't quite get there. We only got to about 63.8. That's what it looks like to me. So if I just hover over here, about 63.8. We didn't quite get as high to try and take out any of that liquidity. Essentially what we've done is we were rejected from this resistance here, which I had on another chart. This one here, we came right into this resistance right here, rejected from it, and that's when we started our sell-off. Now, this was a strategy that I had in for a long, which has stopped out, unfortunately, but that is what it is, and dust ourselves off and try again. We did have this trend line right here, which looked like a breakout. On the retest, we didn't hold, and this was an important level right here. This 60K was a very important level to hold, right? And we didn't hold it, and we fell straight through it, which means that this trend line breakout was a fake out, right? And look, we're coming down even more as we speak, right, as I'm recording this video. So yeah, can't really catch a break, can we? We're coming right into that liquidity zone right now. So the question is, are we just going to get that retest of this trend line, or just sort of take out this liquidity, which I was just showing before, and then form a base, hopefully, or even a V-shaped recovery, and then come back up? Because that would make sense, and we'd have to see what kind of move it is, right? If it's a impulsive move after, then that'd be quite good, you know, 5 waves. But if it's just a small bounce like this, then potentially we'll see lower prices again, you know, isn't great. Another thing I'm looking at as well, if we have a look at the weekly of this very same chart, we can see the stochastic is being reset. So next week, you'll see that when the weekly candle closes, this right here, this stochastic, not stochastic RSI, as everyone talks about, the actual stochastic, will be all the way at the bottom in the buy zone. Now, when was the last time we were all the way at the bottom in the buy zone? That would have been right here in September. You can see right there, September. And where was that? That was right here. That last time we got that sort of fake out low zone, that rounded bottom that I was talking about, right? That I've mentioned a few times. So that there was the last time we got a actual stochastic reset, proper stochastic reset, was all the way down there. That liquidity has been completely taken. We are currently at 55.5K. Wow. So there we go. We've got plenty of aggressive selling taking place. And as far as I'm concerned, yes, we've definitely taken out this low here from back in April on the 29th. And I was expecting this to potentially happen, to be our last wave there, and a complete stochastic reset, which we haven't had since September last year, which honestly was an amazing buy signal, right? In the actual bear market, these can just keep printing one after the next. In a bull market, the sell signals can just print one after the next the same way, right? So you can't really take the sell signals in a bull market as gospel, just like in the bear market, you can't take the buy signals as gospel. But in a bull market, you can take the buy signals as gospel, and in a bear market, you can take the sell signals as gospel. We actually never had any. We kind of got up a little bit right here. That was that sort of complacency bounce, dead cat bounce, whatever you want to call it, but that was it. So that's it. We've taken that liquidity now. So if we refresh the chart, that 5.31 billion, the 2 billion just below it, and the several billion just above it has been tagged, essentially, officially at time of recording. Now, will we keep going down after this video, after I finish recording this video? Well, that remains to be seen, but it looks pretty bad for Bitcoin right now. My hope right now, and we've definitely tagged that trend line. There you go, right there. What was I saying? We came straight down to it. Missed it by a hair, but it's very, very close. Is this the bottom? I think there's a case for it, right? I think there's a case for it. We've got massive bearish sentiment. We've got Germany selling, Mount Gox Coins on the move, minor capitulation. I mean, how much more bearish news do you need, right? How much more bearish news do you need for this to potentially be a local bottom? And if this does form a local bottom, then we have to watch price action very carefully to see if we start to create impulsive moves to the upside. Because if we do, then that's our 5 Elliot Wave count complete, and hopefully we can resume the bull market. So it's pretty crazy. Let's go have a look and see what's going on with Solana right now. Also, just quickly before I move to Solana, I mean, the stock market's pitting in all-time highs. Look at this. That's an all-time high for the stock market. So will we get a mean reversion trade, right? Will either the stock market collapse and come down and then meet Bitcoin, or will Bitcoin come up to meet the stock market? That also remains to be seen, and that would be a mean reversion as well. So Solana's come down a lot. Wow, we're right into that support again. If we have a look here and just look at the structure, I was thinking maybe we'd get a bounce off the wick fill. So if you can see here, I've got these numbers here. That's our Elliot Wave theory count. Now, the number 4, the reason why I put 4 there is because, and things get a little messy when I do, we can see the 50. So the 50-day EMA is actually quite important for this, working out the Elliot Wave count as well. You had that was our first test after we lost the 100 and the 50. That was our first test there. So that's why I've counted that as our 4th wave. So if we just get that off the chart there, we can see that we had the 1, 2, 3, 4, and then 5. So this was our support level created over here, essentially. And Solana only just wicked below the previous low, right? It hasn't been like a big candle like Bitcoin. So Solana's showing slightly more strength than what Bitcoin is right now. I was thinking maybe we'd get just a 50% wick fill of this candle here, but no, we've definitely gone below it. But it's quite typical for the lows to get taken out in another move after, as there'll be a lot of stop losses there. This is a liquidity zone, right? This here is a liquidity zone. But if you look at the structure here, it doesn't look the best, unfortunately. We had an impulsive 1, 2, 3, 4, 5, and then we had a corrective ABC, which means are we about to get another 1, 2, 3, 4, 5. So that's the concern there. And if we did, I guess we could look at the Fibonacci extension. That would probably bring us down to $97, which that's crazy. Potentially, not probably, but potentially bring us down to there, which, yeah, we saw support at that level over here as well. And there's an order block created here, created at this level right here as well. That's our trend-based Fibonacci extension. If we measure the top to the local bottom to the next top, that's our 1, essentially. You can go down to the 1.618, which is $41. Oh, wow. I don't think that's possible in a bull market. So if we do get down there, then we're not in a bull market anymore. That's all I can say about that. But as long as we hold this support right here, this zone, still looking okay. We're literally in this key support region right now. So for me, I'm buying at these levels. Of course I am, as I buy Solana all the time. But at least as far as structure goes, this just looks like a corrective move, right? This move right here. If you are buying here on leverage, or if you're doing any perps trading, then just be very careful, because that's the structure we're dealing with right now. I'm going to use Bitcoin's wave count to hopefully show us that it still could be a local bottom, and we might still get a move off, like some sort of mean reversion or something like that in the short term. If we don't though, and we hit that 55k level already, then that's going to be really, really, really bad, right? If we don't get any bounce around at these levels, then that looks really bad, and we have to start looking at some really much lower levels. Now, we did get a trendline break on Solana, and we did lose our 200-day moving average. This is the simple moving average, and the EMA is just below it. And are we getting our retest of the trend line, which we haven't actually had yet? Well, that's down right now at $118, which marries up with the low back in May, right? So we're back at those, potentially at those levels again. So the support here is for this entire expansive move. That's the 618, which is 114, which is down here, essentially. So if we get a bounce here and then somehow get rejected again and make another way down, that would be another test of this trend line. It's looking pretty crazy. I don't know. I think a lot of bullish sentiment is being really shaken right now, to be honest. One thing I'm seeing though that's pretty interesting, and this is on the daily on Bitcoin, and again, we've taken out that liquidity zone and we're at the bottom here. Have a look at the RSI. The RSI is actually higher than when we were at our third wave here. So the third wave point right there, have a look at the RSI down the bottom here. We're at a higher level. If we can get a bounce here, then that's a bullish divergence. And we also have a hidden bullish divergence here as well. Well, it was actually, but now it is no longer. This hidden bullish divergence is invalidated. This was based on the weekly. if we have a look here on the weekly, the next hidden bullish divergence would have been valid if, only if, this low was higher than this low. So I was thinking maybe we'll get a double hidden bullish divergence like we did over in this range here. So if you have a look, this is the range I'm talking about. Right here, we have a double hidden bullish divergence. We can't get that again because, well, this is a lower low, right? So have a look. RSI level right there is now lower. Only if this low wasn't taken out would that be valid, and that would be hidden bullish divergence. But now it was taken out, so we can't consider that anymore. All we can consider is if we get a bounce here. If we get a bounce here, that's a normal bullish divergence, just a normal bullish divergence, because the level is slightly higher than what it is right now. And that's comparing the third wave right there to our final 5. So we'll have to see if we get a bounce here. It's the moment of truth. If we do get a bullish divergence here on the RSI, then that's going to look really good. Next week, I would say that this stochastic indicator would be well and truly at the bottom, which if we have a look at the level we were at the same level we are now, which is 27, what was priced back then? Well, that's essentially when we had our big leg down, right? So that was it there. Have a look. This candle here, I think it's pretty safe to say that that candle there was when all the bears were coming out and saying it's all over. It's done. Bull market's done. Bull market's over. Pack your bags. It's all over, essentially. And then over here, we had this sideways accumulation phase. This is why I'm hoping we get something similar. And then we put in a buy signal because these will definitely come down to the bottom. Next week, on the next weekly candle close, they'll both be there. And if we do the same thing as we did here, then that'll be our buy signal. But we need to consolidate. We need to consolidate because if we just keep going down, then, well, we could start looking at our 50K level and this support here, which is the wick fill there, right? That's the wick fill sitting at around 52K. Again, as long as we're above this, I'm still relatively bullish, but I'm going to be honest, like this trend line really needs to hold. So the sentiment, it's not looking good, but I'm buying here because sentiment is horrible. Everyone is panicking and there's all this bearish news. And as far as I'm concerned, that's generally a good time to buy. But in terms of leverage, well, be very, very, very careful here because these are the levels that you can start to see some pretty extreme selling taking place, especially with all the Germany stuff and minor capitulation, all that sort of thing. You've even got Peter Schiff coming out of the woodwork, bear posting about Bitcoin there. So we've got, where was this? It doesn't even say. It's got percentages. That's really weird. So as you can see, Bitcoin is at crucial support. If it doesn't hold, look out below. It's a long way down. There you go. Peter Schiff's come out of the woodwork and he's doing his classic bear posting. I'm not so sure about this percentage thing though. What's the long way down? Like, this is a terrible technical analysis. Anyway, I don't know. Whatever works for him. Obviously, he's got a lot more money than me, so he's obviously a lot more successful than me. That was at 58.9K. Well, we're at 55.5 right now. So there you go. All right. Well, I think I'll probably wrap this up here because this is pretty much make or break at this point. It's kind of crucial level. We've taken out the liquidity. We've just about completed our 5th wave on Bitcoin and I'm going long on Solana and I'm buying spot as well. The long has got 0 liquidation risk because it's in a very safe place, as in the account is very well funded. And also we've got the reset of the stochastic and we're still above the 50K. Am I crazy? Absolutely. And will I regret it? We'll see. But apart from that, that's kind of what I'm looking at right now. I do have a short open for Bitcoin and I'm closing a bunch of it here because I reckon we are pretty much at the bottom. Maybe I'm wrong. Maybe I'm right. Time will tell if the future is bright. So anyway, hopefully you liked the video. If you did, then please give the video a like and subscribe to the channel if you want more content like this. And go check me out on X if you want all of these updates in real time before I can do a video on them. And hopefully I'll see you on the next one. Keep safe out there. This is Kryptolytix signing out. Have a good one.